All right, good morning, everyone. Welcome back. Welcome back for a Tuesday edition of Nasdaq Futures live stream. And we did have news about 8:30, about an hour ago this morning. So we'll take a look at that first thing and just talk about what we think that's going to mean for today's trading. And we'll give everyone just a couple minutes to join, and then we'll get going. Grab Nation, good morning. Hanus, good morning. Welcome. Oh, Robin, good morning. Hey, Robin, did you ever send me that message? I know you said you were looking to get in contact with me. Okay, on my YouTube page, when you go to the details, you can find my email there. You can just shoot me an email. Sniper, good morning. Welcome. How goes it, everyone? Mm. It's a nasty whip there. I see what you're saying. Oops. All right, let's go ahead and take a look at our news event. I think we have, I guess at least we have our core group that's joining the first handful of minutes. All right, so just refresh, and now we see that, okay, CPI was better, well, higher. I wouldn't say better. It was higher than forecast, 0.4% versus forecast 0.3. Month over month, it was equal to last month. Last month also had a zero point 0.3 forecast. So the second month in a row, we've been a tenth of a point higher than they forecasted. And then year over year, it leaves us at 3.2 uh, versus a 3.1, or I think the Fed was hoping to get us in the 2.5 to 3% range. So they're probably going to use this to say they're not quite where they want to be. And so rather than raise the rates, or lower the rates, they're just probably going to leave them the same. That's going to be my guess, is they're going to take another 3 months to leave the rates exactly as they are prior to any type of cuts or anything that anyone's looking for. Obviously, rate cuts leads to monetary easing, which allows businesses to grow, which then also allows profits to be higher, and that's when the equity market rises. However, that means that they're bringing in less money on interest rates when they loan money out to the banks. So it's not as good for their pockets. So my guess is by having a slightly higher interest rate here, or a CPI rate here, that's probably going to do something good for currency. That's going to mean they're going to leave the rates high for a little bit longer. And so that's going to be a driver for the dollar, and that's going to be a negative for what we're looking at on the equities market. So that's just my take on it. We do have at 1 o'clock a 10-year bond auction announcement coming. I guess previously it was 4.09. They don't have a forecast. They just report whatever it is for the current term. So we'll figure that out at 1 o'clock. Tomorrow, the only thing we have is something very similar, but it's the 30-year bond market, bond auction. And it's at 1 o'clock as well tomorrow. So nothing tomorrow morning. But we did just have this pretty sizable 4 or 3-tier event at 8:30. All right, now that we get back to the market, let's go over and look at our comparison chart first. Let's right, and we can see that the CPI announcement this morning was pretty good for the dollar. It looks like it first took a dive down into this fair value gap, collected a few more orders, balanced price, and then we saw it move back up into the range that it was selling from. And I had been waiting for a price to sell from this level quite a bit yesterday, and it was starting to push down. But you know, what can you do? It's back, and it's already overtaken that level. So I think it's safe to say that the dollar is now bullish until we find something different. In fact, we can see the breaker here. We saw a break below. We saw a trade above. It closed. And so now we probably expect the dollar to rescind back down into the breaker level. From there, continue its bullish ways. So in short term, we're looking for the dollar to be bullish. And it'll have some sort of target up here, and we'll see how that performs later. But that also means that in the short term, we're also looking at potentially lower prices for our equity market. Since we're focusing on Nasdaq, it's now sitting in between this hourly fair value gap and this hourly fair value gap. Or if you want to disregard the center one, we'll say it's this bearish one above that we rejected from at 8:30, and the bullish one below, also holding a key position at 8:30. Okay, that's just my initial bias. Obviously, in the next hour or two, we'll see how price responds to that news event. Plus, we have the opening bell coming up in 3 or 4 minutes. From there, either change my position or it'll be confirmed and we'll continue moving in that direction. But right now I'm expecting lower prices, and we'll just see if that's what we get. So we have the opening bell coming in about in about 3 minutes. Just trying to look and see. Let me just mark out consequent encroachment here of the wick. We generally like to see wicks traded back into at least 50%. Oddly enough, that consequent encroachment level is also the middle point of the new day opening gap. Right, new day opening gap was created here at 1800. So that will likely be a key level. Let me, I'm just going to go ahead and put a marking there so I don't have to leave this box here all day. There we go. And since we have that, I can actually drop the new day opening gap totally. You know what? I don't even have to say that it's the middle of the wick. You can see that. All right. Vivian, good morning. Chuck, Brian. Hello, everyone. 18425. Okay. Okay, so opening bell has us climbing to start out. We have the 1 hour fair value gap there. We have a 5 minute here, which it may drive right through, but I'll mark it up anyway. 18.95. At the moment, all indices as well as the dollar is bullish. It's still early in the opening range. We're only 2 minutes in, but we'll continue to watch price and see if if Nasdaq reacts the way we expected it to, or if Nasdaq continues to push higher. There we are. Oh, Queen, cool, calm. Molly, good morning. Miss Healthy, good morning. Why can't you see June on TradingView, Chuck? You just have to go here. Make sure you have your futures highlighted, and then you just go and just select what you're looking for. And then it should be in sequential order. So you'll have your continuous contracts first, and then you'll have your quarterly contracts just below. You just add the ones that you want, and then just organize it on your watch list how you want them. I still have the last quarter just in case there's something that I'm missing and I'm looking for maybe some drawing that I had on my older chart. I can go back and say, okay, well, where was that trend line, or where was that marking that I put? But in a couple days, I'll delete it and get rid of it. Oh, no problem, Chuck. No problem. Right there is consequent encroachment of the wick as well as the new day opening gap. Mm, yeah. Not sure how Queen's going to answer that, but I'm sitting here looking at the London session here, and it looks like London was waiting for the CPI announcement. You can see here just complete consolidation leading up to the session. It got kicked off at 2 o'clock. You see from 2 o'clock all the way until almost 4 o'clock, nothing happened. We have one little impulse expansion leg down, and then sideways movement again until the news announcement. And that's when you get the big candle here. So it looks like it didn't deliver very much. And it's like that sometimes. So sometimes London will have a big move and New York will consolidate, and vice versa. London will consolidate and New York will have the move. Oh yeah, Queen. That's too early for me. Yeah, 8:30 in the morning, or in my case, 5:30. That's yeah. Just surveying the land here. Just give me a moment. Trying to figure out where's market structure on each of the different time frames. All right, it's like the 15-minute down is bearish, and the 1 hour looks to be bullish. Four-hour bearish, daily still bullish. Weekly still bullish. Okay, so weekly, daily, 1 hour bullish, everything else bearish. Queen, you said a breaker on the 5-minute. Okay, let me see if I can. Oops. Let's see if I can recognize the same thing that you see. Hmm. All right, so now we finally on the 5-minute. We have a closure below this wick, the long wick here. You know what? Let me drop this line here and just add back in the new day opening gap. All right, we are 15 minutes into the opening range here. Another 15 minutes and we'll have the opening range set, and then that'll give us our New York low and high. Looks like now what it's going to end up being is the high from the opening or from the CPI news event. It's going to be our New York high, and we'll see how far down it pushes before 10 o'clock to give us our New York low. $8.25 candle. Okay. Yeah. Hmm. didn't quite close below until this candle. Then you had this next candle just tap right back inside, just a hair. So I don't know if that 935 candle qualifies as a retrace back in, Queen. But that might be as good as it gets for now. Yeah, I'm gonna go ahead and label this a New York high. It's pretty clear that's what this is. Yep, Queen. If you're looking for a 50% retracement, I have a similar level. It's right around that 830 open, so that's probably what we're looking at. Nah, I wanted that 5 point scalp, but I couldn't get my stop loss in quick enough. I need to start using the long tool. Mm, it's moved too far away. Let me try to find another one. Maybe coming back down. So let's see. Where did I? 210. Sold it 211. Okay. Gotta love it. And I think I can go ahead and mark up the New York low now. All right, there we go. So now the only session highs and lows available are the New Yorks. And we now see price trading to about the equilibrium mark. So it really could go either direction once we hit 10 o'clock. Either direction first. Doesn't mean it's going to continue in that direction, but so you know, the 8:30, we have the midnight, and then we have CCE of the breaker here. Yep. Yeah, we're at the 8:30 open now. Midnight open is only in a couple points. Hey, opening range is now complete. It's 10 o'clock. Let me just go and put a Fibonacci on the New York range. 50% is at 278, which we are traded above now. So we're now in premium of this New York area. Can't believe my entry got tapped out at break even, and then it ran for 60 more points in 6 minutes. Hmm. Oh, we're still in yesterday's range, Sniper? Yeah, you're right about that. We sure are. $196. Oh man, Sniper entry, Ray. I think we finally have got something that we can use. $290. I'm going to close my entry there. Looks like a flawed entry. Yeah. All right, looks like it bounced off of the new week opening gap, the little orange shaded area there. Because we were right around the opening from Sunday evening. I'll be back. I'm gonna go ahead and refill my coffee while the price is consolidating here. I'll be right back in just under 2 minutes. Antonio, good morning. All right, Sniper, we're in at the same position then. It's hard to say. I think the last month was the first month I really paid attention to the bond auctions, and I feel like it had some volatility to it. But I can't remember. Yeah, don't quote me on that. All right, so we're getting a retracement from the dollar at the moment. So far in this hour, first 20 minutes, it pushed up to begin, but now it's below its opening price for the hour, retracing back a bit. We see the S&P and Nasdaq are both bullish for the hour so far, and Dow is right around its opening value for the hour. So not a lot of progress going on with the Dow, but we are experiencing some consolidation here with Nasdaq. Prices are refusing to put in highs. You can see each candle is putting in a lower high, it appears. Right? Even the last candle, the exact same thing, lower high. Granted, we're on the 1 minute, so let me switch over. We're well past the macro period. I think we finally broke that streak a little bit, took out a couple highs. Okay, we did. Just to get back in the winning column there. Thank you, Martin. I appreciate that. Thank you. Joseph, welcome to the channel. Good to have you here. And thanks, Queen. Sniper, were you able to hold on to your long? My original one, as you remember, probably got stopped out at break even, and then I re-entered. Yeah, I didn't have multiple contracts. I would have liked to have looked for the New York high, even though it's no guarantee that that's where price would go. But I felt like the consequent encroachment of this fair value gap here was a nice safe spot to exit my trade. Yeah, originally I was looking at just sweeping these equal highs. So the same one you're talking about. And then I revised it and said, let me get the consequent encroachment of this gap here. Because this gap is obviously on a lower time frame versus this one here, which is the 1 hour. And that was one of the reasons why I thought maybe the New York high wouldn't be met just because of the gap. But yeah, I tried. But you can see how hard it is to win trades when you shift your stop loss. It's not easy. I appreciate it, Templar. After your day is coming, you're gonna crush your evaluation. Oh man. Oh, okay, got it. On the 1 minute, let's see. On the 1 minute, um, hmm. I would say that's where we already were. We were already there. I would think this would be the end of the buy model. All right. So while this is all occurring, let's go and check and see our comparison chart and see where we are. I mentioned earlier we were having a retracement on the dollar. We can see that it's creating a swing high. Doesn't mean it's selling off. It just means that it's creating a swing point that price can either trade up through or it can reject and then trade back down into this area. And we can see the equity markets are running out of the screen. Just keep in mind, the S&P and Nasdaq are both sitting inside of hourly bearish fair value gaps. So we're not out of the woods yet just because it's showing bullish momentum. We need to make sure it breaks through and closes. So we have another 25 minutes before it closes. Mm. Yeah, I see that just ahead of us at 430, 420, that area. Back over, and we'll check in either just before the hour closes or just after the hour to see if we were able to clear that hurdle and close above. But as of right now, we're still inside of the fair value gap range. And actually, we don't even have to check over. We can see it from here. When we get to 11 o'clock, we'll just look and see if we're closed above or below. But I can remove the New York high because that's gone. Now the only session high or low is the New York low. And since that's our last session, last open session extreme, that would lean me towards a bullish bias now, unless we're in seek and destroy mode again like yesterday. $368. Okay. Sweet. Awesome, Robin. 5%ers. Um, I just drew in a 5-minute fair value gap here just in case we get a retracement, and it's a right around 18,350. Oh, most of you already noticed I've switched over to the June contract. So yesterday when I looked at the numbers and what the volume was, it was showing 120,000 for the June contract and 100,000 for the March contract. And then today I checked it again, and you can see the March contract's only 64,000 versus the June contract at 120. So it's a much larger difference on the new future contract as opposed to the expiring one that expires on Friday of this week. So making that switch over was a great move for today. I could have done it yesterday if I had all my drawings and everything on the new contract because volume was a little bit higher. But on Friday, when the continuous contract switched over, the June contract wasn't even close. So I just wanted to point that out and show you what the updated volume looked like today. All right. Right, on the lower time frame, we are experiencing a small consolidation here. Looks like it may want to expand soon, but so far we've been in this tight range of about 15 points for the last 10 to 12 minutes. $1K. All right, Martin. All right. All right, Martin. Take care. We'll catch you next time. Templar really depends on what it gives me. Um, Again, trading is based on opportunity. It's also based on a risk reward. So I have to analyze all of that together and decide if I'm going to take another trade. But I'm not going to throw in the towel now and say I'm not going to take a trade. But again, the market has to present itself, and generally, when the market presents itself with the greatest opportunity, is around news where there's an uh, energy injected into the market where it is moving quickly towards a target, as opposed to taking an entire session to get there. So we'll see. But I don't want to commit to taking a trade just because. But hang in there. You may see something, and if not, even if I don't take a trade, I'll still outline potential trades that I see, and from there you can decide if that fits your risk profile and go from there. To the June contract. All right. So on the side profile here, when you have everything showing up, you go to the plus here. You want to make sure that you're in futures. Okay. And then from futures, you want to select from the left hand side which market you want to look at. In this case, we're looking at NQ. So NQ1 exclamation point, this is your continuous contract. If you use the continuous contract, you never have to switch. The market will always adjust every quarter for you. based on a predetermined date. I like to switch mine based on volume. So I like to switch mine manually, which is why I use the quarterly contract. And so if you drop down below the 2 continuous contracts, you'll see one for each quarter this year. And they even have 2025, and wow, even through 2026 available. So there's plenty of, but there's very little, if any, volume on those. So don't grab one of those future ones. But the next one here, June 2024, NQM 2024 is the code if you just wanted to type in the code. But if you needed to find it, go to futures, find your market, expand the menu, and then find your quarter you're looking for. All right, macro, like Ray said, macro's a few minutes away. So let's look and see if it's going to be pushing towards a target, what that target might be. All right, so Friday's afternoon high, and this is just the afternoon session. So after lunch, after 1 p.m., that high is 825 and a quarter. Okay, we haven't quite gotten there yet. We got another 7 points or so. You're looking for the lunchtime high from Friday, which also has not been traded back to. That value is 864 flat. So Friday, let's go ahead and mark that. Oh, the spread. Oh man. Whew. And thanks for sharing that, Ray. We all need to hear some of the stories of people who are doing really well in trading, just so we know we're not alone when we make those kind of mistakes. But you're right. This one you can laugh at now, but it probably stung when it happened. All right. So we've already taken the afternoon high from Friday. Again, the lunch high I put on the screen is at 18,464 flat. Mhm. There we go. We'll do that. All right, let's drop down to the 1 minute. We are really close. Yeah, it looks like targets are going to be met during the macro period. If you're ever in a trade and it looks like it's slowing down and you're getting this kind of action and you're not sure if it's going to hit target or not, but you're getting close to the end of the hour, like it's, whatever the hour is, 40 or 45, just wait until 50. And then you'll start seeing price ease up and start moving towards what you were looking for. More times than not, that's what's going to happen. You're going to end up hitting your target during the macro. I'm going to drop the 1 hour down in the lower left hand corner chart so we can just see how explosive this bullish price action has been this hour. The bears are coming into the bull ring. Yeah, I see what you're saying, Ray. This is what I was hoping to enter from. to come out of CE of this 1 minute fair value gap? It did. Hmm. Oh, Queen. Yeah, I think you're still on the previous contract. I forgot about that. It's like, what is she talking about? 213. Wait, be right back. I'm gonna fill my coffee as well. All right, I see we're still in the game here. Let's see if we can go to target. Got me out. Okay. Break even there. Let's see, where are we now? Hmm. Hey, low, you're short. Okay, got it. Well, there are a lot of retracement areas that it can move it down to because we just had a continuous hour of bullish momentum. And if you just look at this 1 minute chart all the way down to just before 10 o'clock, you can see we just had an hour of sustained bullish momentum there. So retracing is not out of the question. Let's go ahead and just measure this up to see where we may come back down to. Right. If you look on a higher time frame, like even the 5 minute, we're not bearish until we get below this level. Like that's how sustained this run was. So we could really see any type of retracement here that remains bullish, but gives us a decent entry for something for a continued long, maybe the latter half of this hour or into the lunch hour. So I think what we could be looking at is this right here. Right. And for all I know, I mean, it could just run up now and do exactly what I thought it was going to do after coming and sweeping me out for being too early on the entry. Right. Because my entry was here, the consequent encroachment here at 1804 flat. And we can see, even though we swept that level and tapped me out at break even, the bodies are still above that. Right. So the entry is still valid, and it's almost back at the highest level that I saw as a trader in this trade. Right. So if we do have a failure here, then we'll look at some of these levels down at 38% retracement or at 50%. But if not, and we break this high and go for this high, then I would expect it to continue on to the lunch high from March 8th, which was Friday. See, there I go again, moving my stop loss, and that was a winning trade that I can't take that I can't take home with me. Man, only 27 likes. Yeah, 416 maybe. Yeah, 416. All right, that does it for our macro period. And all we did was sweep a short-term low, which didn't do a whole lot. Excuse me. All right, now that we're in a new hour, let's go ahead and okay. Forgot to check back at 11 o'clock and see where we landed. 11 o'clock. Well, this was a 1059 candle that closed. It was a bullish candle that closed above the zone. 1059 closed inside of the fair value gap, and this closed above. It was a bearish fair value gap, which is now bullish. And actually, this bullish fair value gap we're seeing here is not confirmed yet. It won't be confirmed until after the hour is up. So let me go ahead and change that on my settings. Wait for it to close. There we go. Yeah, price is just slowing down right now. I mean, there's been a lot of movement this morning so far. I mean, if you think about it, from 8:30, we went up 175 points. Then we came down 200 points. And now we're up 250. So 175, 200, and 250. That's a little over 600 points of price action in 3 hours, 2.5 hours. So if price wants to consolidate for just a bit, we should expect that it's going to slow down and not race up to new pools of liquidity at the moment. And don't forget, there's another high impact news driver at 1 o'clock. We have the 10-year bond prices being announced. Get back up to the 5-minute chart. There we go. Deepak, you're right. It has been a crazy ride. But that's what you get on days where there's high impact news at 8:30. And then you also have the opening bell at 9:30. So between those two, you're going to get probably a swing in one direction and then a swing in the opposite direction. So that does give you quite a bit of price action to find an entry, and also to find the pretty easy pools of liquidity that it's going to pull to. All right. Let me pull up the hourly here. Let's take a peek at the hourly just for a bit and just see what we have. Okay, let's come out of this. All right. So if we're just looking at the hourly from distance, I'm looking at the breaker being here. Swoop below, trade above with a close, trade back down. Even though we got wicks below, we got bodies well above equilibrium. There were consequent encroachment. We have the hourly fair value gap in here. So we have the unicorn set up right here. And what we just most recently got was the swing high. We have a high with a lower high to the right and a lower high to the left. So this swing high was just taken during the last hour, during the 10 o'clock hour. So far now, this hour, we see it trading above. It did trade below a little bit, but it's back above that swing high now. And here is our March 8th lunch high, which is also the lower extremity of a 1 hour bearish fair value gap. So what we may see is price digging here before the retracement. But whenever you get one of these where price crosses over a swing to the left, you always get a pullback of some kind. And so that may be what we get during lunch. And then potentially we could see a resume of bullish activity after the news announcement. And if we don't, if we get a push up here during lunch and it just kind of hangs around here, then maybe the 1 o'clock news is what's going to pull us back in. And that's when you'll get a reaccumulation and there will be an expansion at some point in the future. Right. And that's if we're in a buy model. If things flip and then we end up finding ourselves down here by the end of the day, taking out the New York low or taking out yesterday's, yeah, okay, this is the daily low. So yesterday's low, if that happens, then of course we're looking bearish. But right now, all time frames are starting to look bullish. Even on the higher ones, we had the 4 hour finally really push above a swing high that it had as well. So I just wanted to highlight where we are on the 1 hour. And then just look at how the profile is looking. With all-time highs up here, new week opening gap that could hold us up, new day opening gap from last week sometime that could hold us up. But drop back down to the 5 minute. Oh, push today. Okay, I see. And price really taking its time to get up there. Yeah, reaching this 1 hour bearish fair value gap is also completing the 4 hour, going to the upper extreme. This is where the 4 hour ends and the 1 hour begins. Generally, you see it the opposite way, where the higher time frame is above, being stronger. Now the higher time frame is in this range, and once we get out of the 4 hour, then we enter the 1 hour. These things. Oh, thank you so much. Appreciate it. Yeah, if you're enjoying the live stream so far and you haven't hit the like button, go ahead and hit that heart. The heart, the thumbs up, whichever one you see. Okay, so far this hour, we have gotten new highs from S&P as well as Nasdaq. We have not gotten the same type of price action from Dow. Dow is currently bearish for the hour. It's the only one showing a bearish candle. But if I go back to the dollar, dollar is currently buying this hour. Found some support near the low of last hour, or I'm sorry, where the close of last hour was. And now we see it picking up again. In fact, let me just go ahead and show that quickly. All right. We see it found support here near the close of the previous hour. It did a small wick below, but for the most part, it's been buying this hour. And then we see the Dow. The Dow is currently struggling, whereas we're still getting a bullish candle from Nasdaq and S&P. During the last hour, when we had the massive bullish candle on all three indices, you can see that's when price is just quickly moving towards an area, and that's when we like to trade. It's when they're not moving together that you start seeing the back and forth or the stalled price action that we're seeing now. We're now at 11:30, so hopefully that eases up now that we're at half past the hour. We do sometimes get some type of easing during that time, so let's see if that happens. Right, it got really close to hitting that fair value gap, and it turned around. So let's see where it may be retracing to. Mm. Yeah, ES looked like it's at that crossroad where it's at where the same value it was at the start of the hour, whether it wants to be bullish or bearish. The wick is the same size above and below. So we got the Dow selling, we got ES sitting right at equilibrium, and then we have Nasdaq currently still in a buy position for the hour. Yep, Nasdaq's equilibrium is at 405, so another 40 points down, and then we'll be looking at potentially whether Nasdaq wants to sell for this hour. See, it's pulling back on the 5 minute. I'm also looking at the 1 minute on a different screen and looking to see if we have a sweep of a low. So we get a sweep of a low of some kind and then start showing like it wants to be bullish again. I'm a little cautious about going long. Okay, all right. So we see the dollar losing momentum now. It had it for quite some time, but it's now losing it. And finally, the Dow is at its equilibrium point, looking like it might want to turn bullish for the hour. Yep. So we may have everything in sync as we approach the macro coming up. Just give you a peek at where we are. Right. You see dollar now is flipped over. It hit its equilibrium point, and now it's slightly bearish here. We also, when we see the opposite here on the Dow, remember it was all bearish the first half hour. S&P and Nasdaq are about the same as they were. If we can get the Dow to catch up and we get the dollar to push down a little further, then I think it may run up and hit the target that we've been looking at. Let's go ahead and measure out this retracement so far. Okay, so we did cross 50% on this candle, the current candle that we have. It closes in 30 seconds, but we did trade back into discount. Discount starts at 18,431 and a half. So it could retrace deeper into maybe 61%, which is the same as this previous high, the previous swing high that we crossed over on the bullish move up. And that in 61.8% is exactly the same level. So maybe that's what we'll get a retracement down to before the bullish momentum continues. Or we could also get 70.8. And if you also look closer, this entry that I wanted at 78.6 is right on top of each other. All right, let's clean that up. And here's more retracement. There's 62. Right, there's 78%. Yeah, it's right there. All right, it's gone as far as 88 and maybe further. There we go. Full retracement. Now it looks, let's see if it attacks the swing low at 399. All right, look, we are in sync now. All of them looking the same. And then we have the opposite over here. All right, it had such a small fair value gap here. Once we traded below this fair value gap, then the likelihood that price was going to stick in here was pretty low, and it's going to bypass the lows, and then we have two fair value gaps it could trade into. I like this one. I want to see put a wick through it, body stay inside. Okay, I'll go ahead and mark that up. Here we go, protected low there. We break that, then we're looking at break a structure, not necessarily market structure shift, but definitely break a structure on this time frame, on the 5 minute. Okay, there we go. Got it. Give me a minute. I need to run for just a second. All right. Okay. Have our other two indices are digging in a little deeper than what we see on Nasdaq. Wow. Quick scalp there for 100. Okay, we're in the macro now. Let me shift down, take a smaller time frame. $18,406. All right, sniper. Way to go. All right. What we see here isn't very it's not uncommon. Like during the last macro period, we were looking at the retracement into an entry that was going to take us to the lunchtime high. It's not uncommon for sometimes that progress to stall and you get a retrace back down to your original entry during the following macro period. Right. So this one is likely the one to run to the high and get to target. And then we'll see what the lunch hour brings us. And I only say that like during my back testing sessions, I just saw that happen several times to where price would just kind of consolidate for a full hour. And then the following macro period is when it would give you what you were looking for. Right. So there's that 50% entry. All right. One more minute. We'll have a closure of the 5-minute candle. All right. Let's just take a peek at that. See where we land. So right now we have a bearish fair value gap here. What we want to see is this put a complete body on top, and next candle create this bearish fair value gap on this side as a bullish fair value gap. Let's see if we get that. "15 seconds to closure." There we go. Yep, closed out that entire fair value gap there. And let's see now if we do not get a retracement back down, but we get maybe a tiny little wick, and then we get a push up. So we'll come back towards the end of the 5 minutes and check and see where it is. See if price wants these equal highs or if it wants to leave them there. All right, that bullish fair value gap that we were hoping to create has been fully closed in, so we will not get a fair value gap there. We still want to see if price wants to take out those equal highs at 18,443. If not, and we get a failure there, then we're going to probably come back down and retest that fair value gap below us. If that was the case, let's go ahead and measure up and see where we are on this retracement. All right, so we're at 62% now. Oh, same setup on the Dow. Okay. Right. All right, everyone, that's going to do it for this morning session. I want to thank you all for being here and supporting the channel. And just let you know, we'll be back in 1 hour. I'll take a 1 hour break. We'll do the lunch, and we'll be back at 1300 for the afternoon session. We'll run that until 4 o'clock. So again, thanks everyone for being here. Hit the like button on your way out, the thumbs up. And if you haven't already, go ahead and subscribe to the channel, hit the notification, make sure that you're getting invitations to every time we go live. All right, take care. We'll see you in an hour.